Coming up next is another interesting counter, because this one more of an investment holding company, and I'm talking here about RMI. Rand Merchant Insurance, I guess, is the wrong name, but it's pretty much widely known as RMI. Remember, investment holding, yes, but it's got significant chunks of the following very, very substantial assets. In the listed environment, we've got MMI, which is Momentum, Metropolitan, and Discovery, 25% of each of those companies roughly. But then, why we're talking about it today, it owns nearly 95% or thereabouts of OUTsurance. I think people are familiar with that player, very strong player in the direct-to-market sector. And then there are a couple of other assets that I guess we could touch on. Market capitalization, 62 billion rand. So you can see what size of player this is with those underlying assets. Price to earnings ratio 21.6, dividend yield of 2.7. And JP, having sort of presented itself as sort of an investment holding company with very little going on, it seems now that they're beginning to position themselves with Herman Bosman at the helm to do more and to invest more actively outside of that portfolio.
Correct. They've made a few high-level appointments. They are making sure they have the capacity to build a fourth pillar within the organization, to go into financial services, whether it's mobile banking or other technology-enabled services. So it could be quite exciting, but it's very small relative to the MMI bit, the Discovery bit, and the OUTsurance bit. Yeah. And no one even speaks about RMI Structured Insurance, which for now is also very small.
Okay, so leaving that aside, we want to talk about OUTsurance because that's why it's here. I mean, that has got to be a source of massive cash flow. Talk to me about its model. Continues to grow from strength to strength, market share rises, and they've got something going on in Australia, right?
They do, called Youi. So
how do you spell that?
Y-O-U-I, exclamation mark. And there they have exported the OUTsurance business model from South Africa and reproduced it in Australia, and it's going very well there. To touch on that first, there have been some storms in Australia. They get these cyclones every now and then. And
fires in Australia too, Dan.
Yes, fires, floods, tornadoes, so all kinds of weather-related issues currently and more recently in Australia as well, which is a bit of a dampener. And they also extended that into New Zealand, which is still at an early stage, but that's quite exciting. Okay. Coming back to the business model, what is similar to someone like Santam is that they sell short-term insurance, mostly in personal lines, mostly direct, so they do not use brokers and need to pay commission. Yeah. They have their own sales force in call centers, which means they have a higher underwriting margin. The flip side is that maybe there's less growth, but if you pick your risks well, it makes sense to have the higher underwriting margin, selling direct, saving the commission, and then if you bring in the insurance profits as well, they prefer your fixed income type instruments, very stable. That is their model.
Exactly, because I saw that. We had Wayne McCurry on once and he alluded to that, which is fine. That's interesting though, because I would have thought whilst that's a good thing from the security and stability point of view, you do miss out a little bit. But maybe I'm just too bullish on equity markets by nature to assume that that's the correct way to run a business like this.
Well, it's give and take. There are regulations that have changed, the solvency requirements that have come in, which means that the more stable your investment portfolio, the less capital the regulators allow you to have in your business. Yeah, so you can go for high returns in equity markets, but then you need to hold more capital because of the volatility. So it's a bit of a payoff.
It kind of goes swings and roundabouts. Let's look at the 5-year chart. So RMI has been a real winner. And again, it only really came to the market as a consequence of the reorganization of Remgro's interests in the First Rand Group and the shuffling and moving around of assets. But it was a wonderful investment opportunity at the beginning. The question is it still a wonderful investment opportunity? Is it not the case that OUTsurance is fully priced in RMA's share price and that the underlying listed entities, you can just do a straight-through calculation?
I think that could be the case. I think there's some expectation that this new fourth pillar of the group is going to do amazing things. Yeah. I think it's a bit too early yet to expect that. Yeah. And therefore, the premium in the price, when you add up the underlying components and compare it to the value of RMI itself, for me, the valuation looks quite full, especially if in the short term, there could be issues in Youi in Australia. Yeah. So I'd be a little bit cautious.
Okay, but I'm going to go with hot anyway, because I like Discovery as much as I do, and I think that's going to drive forward gains, and MMI, I can't see any reason. I'm optimistic about the outlook for the market and so on. I'm going to call it hot. How are you feeling with regard to the hot or not?
I agree, but once again, it's not at the extreme level of hot. It's just on the hotness side of the temperature scale.
Okay, good. We'll take that under advisement.